Yo, what's going on, guys? Hope everyone can hear me right. Hope all you guys are having a great night. So last week I started essentially documenting every trade that I took, the good and the bad, the lessons I learned, and maybe probably the right predictions that I made. So today I went ahead and wanted to share with you guys a trade that we took during Nvda earnings. That was a big, moment in the market yesterday. We had a lot of investors, on the edge of what was going to happen, especially given the current market conditions. We're not in the greatest economy. There's a lot of speculation behind us having an AI bubble and really losing a lot of kind of value in the market. Everyone's saying that the market's a bit overvalued. Stocks are trading near all-time highs. It's a bit not necessarily the greatest market to be in, if we're being honest here. So we went ahead and traded Nvidia earnings last week, and I wanted to just document with you guys what we ended up taking. So I'm gonna explain to you guys, what was my mindset, my psychology, my perception going into this trade that allowed us to make 160%. So here we are, Wednesday, November 19th. Let me go ahead and fix this chart for you guys. So you guys can begin understanding what was my mindset going into this trade. Let's go ahead and take a look at the day. So immediately, right, at market open, we have Nvidia here. Let me go ahead and fix this. We had Nvidia open up bullishly. Boom. Set one of the most iconic bull traps we've ever seen. You see it open up, run immediately from lows of 183 to a high now of 180. Not 187 exactly. Yeah, actually 187, almost 188. So 183 to 188, $5 in bullish momentum, share price gain. And then about 30 minutes later, look at what happens. We go from highs of 187 down to a low of 182. Lower than previous lows of the day. So we've seen the biggest bull trap. If you guys don't know what a bull trap is essentially when the market's a bit manipulated, right? It shapes out to be a bullish trend, and then turns out bearish. So a lot of investors were caught in this, crossfire. I warned individuals that, hey, going into Nvidia's earnings tomorrow, be conscious, understand the current state of the economy, and that really Nvidia's earnings is not going to be the determining factor of the entire market's value. Although that's what it seemed like, last week, if we would have had a negative Nvidia earnings and them not beat, EPS or revenue, we would have seen the market have a really big correction, as this AI bubble narrative has picked up a lot of attention from investors here in the market. So first I told my group, all right, be cautious of, Nvidia earnings. We have a really, negative unemployment, negative job supply. Like, we had some numbers come out in October about the October. First of all, we didn't get the government data from October. No GDP, no CPI, no PCE. So we're already kind of on the edge of what's really happening with the economy. And the only insights we have is ADP's job report, which is a third-party job report, and it showed that there's a decline in the labor market. And then we got September's data that showed that it wasn't that bad. But you have to understand it from an investor that if we're not getting October's and September's wasn't that bad, October could really be that turning point where things took a turn for the worse. And, really we don't know what's happening in the economy. We're kind of investing blindly. So this oversaturation and value in this stock of Nvidia and the whole AI sector has really been what's maintaining the market at these highs. So I was already kind of, on the edge, didn't play anything here, didn't take calls, didn't take puts, was letting the market play out until the final quarter of the market, going into 11 a.m., 12 p.m. here, if you're Pacific Standard Time. Those are the time frames that I was looking at here, that you see this big orange rectangle, and I started watching the market. So first, dodged the bull trap, dodged, the bearishness right here. I seen this jump off of here at 182, and after we just started consolidating. There is no clear direction. We were consolidating for a really long time, and that made me not trade specifically Nvidia. But as I knew there was going to be increased volatility in the market because of Nvidia's earnings, I was like, you know what, let's go ahead and look at their cousin. If you guys don't know, Nvidia CEO has a cousin, and she runs AMD, which is also in the microchip in the microchip industry. But the thing with her is she's in charge. Well, her company's in charge of producing CPUs, and then Nvidia is in charge of making GPUs. So two different components, kind of for the same sector. So once we've seen AMD, now let's go ahead and look at the differences in the chart, and I'm gonna explain to you why I was able to minimize risk and trade a more probable setup. If you guys don't know what a setup means, it's essentially, excuse me, a setup is essentially a point where a chart is, you can kind of describe it as, here we're looking at a chart. There's more opportunity in certain charts, ways to minimize risk and take yourself out of the fire, out of that harm's way. So looking back, let's go ahead and, look back at Nvidia here. Nvidia, consolidation November 19th going into 11 and end of the market, that power hour that we so famously know it as. Consolidation, right? Now, I'm going to come back to AMD. Look at AMD. AMD, no consolidation, clear bearish trend. I like this setup much more going into Nvidia's earnings, and I knew that they were correlated because they're both in the same sector, so that increased volatility was going to impact companies all across the board. But unlike Nvidia, we didn't have, arguably you can say this is kind of your consolidation, but even then, the consolidation here still has a clear bearish trend. We have these lower highs and these lower lows. So that was a clear indicator for me to want to play this reversal here on AMD, then put myself in harm's way of that consolidation, and then Nvidia earnings don't get beat, or they do, and now I'm more exposed to risk, maybe, on the verge of losing the capital in my position. So I looked at AMD, clear bearish trend. I'm like, let's play the reversal, and that's when we went ahead and entered right over here. We've seen this reversal of the bearish trend, a break of structure here, starting to form a bullish trend. Once we formed that bullish trend, I was already on it. I was already, okay, you know what? Nvidia's earnings might play out. I'm going to keep an eye here on AMD, and I'm going to take these positions. Why was I feeling much more comfortable on AMD? Well, aside from, not just avoiding the consolidation with Nvidia, you have to take a look at AMD from the 1 hour chart. AMD has been extremely oversold in the following, couple weeks here. Let me go ahead and show you guys why. All right. Prior to Nvidia's earnings, Monday, opening up the week at 248. Wednesday, we're opening up the market at 232. You're talking about $14 almost. Let me see, $14, $14 to $15 down the drain. Already down, starting the week negatively. So that showed me that here, we're in an oversold position on AMD. That's more attractive to me than being in this kind of state of consolidation compared to Nvidia. Nvidia had a little bit much more stable price action compared to AMD following this clear bearish trend. So I was like, you know what? Let's go ahead and take advantage of this oversold opportunity here in AMD, and we'll play it for Nvidia's earnings. And sure enough, let's go ahead and open up the 1 minute chart and let's see how this played out. Everything didn't happen until after hours, which was, the scariest part about playing earnings. For any investor, any trader getting into it, playing earnings, as you may know, is by far one of the most nerve-wracking things to do as a trader, because you don't know if it's genuinely going to beat earnings. Even if a company does beat earnings, sometimes it still happens to sell off. So we were able to clear, before market ended, 40% here. This blue is signifying after hours. For you guys that don't know what after hours is, that is after the market closes. So here in California, we have market hours being 6:30 a.m. to 1 p.m. Pacific Standard Time. So this blue shaded area here represents your after hours price action. So once we entered here, let me go ahead and mark this, put this back on so you guys can see. Once we had entered here, before market close, we got that spike of volatility up to 225. I remember that 225 mark. After we hit 225 mark, an hour later, the call begins, and we spike all the way up here to 236 at a high, 235.50. Market opens, I signaled to my chat, everyone take profits right here. Why? Because I knew that Nvidia's was just increased volatility. It wasn't a real narrative for the market to find true value in. It was more so just a form of reassurance for investors that we weren't in an AI bubble. So once we got over that narrative, okay, we're not in an AI bubble, great. Well, now what's going on with the economy? You know, we still have this increase in unemployment. We still have inflation rising. We still have a declining labor market. So once we seen that, you know, boom, we got that out the way, but we still dealing with the economy. Boom. That started tanking the market. Although we beat earnings, although everything was great, instead of investors buying, they were still in the fear of what's going on in the economy. Next day, straight bloodbath. Actually, back, if not below, where we were trading before earnings. So we dodged a bullet, you know, not being greedy and holding for more percentage, closing at the beginning of market open, taking those profits. And bro, huge opportunity last week. But going into this week, you know, we have a lot of opportunities. I'm going to go ahead and start a stream here in a little bit to share with you guys my perspectives going into next week. But I hope this recap was able to give you guys a little bit of insight to how to perceive the market and take more high probable setups instead of simply just, you know, always risking or trying to guess the market. You know, there's ways to avoid risk in the market. You know, obviously it doesn't come just overnight. You have to be able to know, okay, avoiding consolidation, trading more bearish and bullish trends, especially if you're looking for reversals or pullbacks. You want a bit more of confirmation and a better probable setup. On my next video, probably on my YouTube channel, I'll share with you guys probable setups compared to unprobable setups. That kind of help take the guessing out of trading. But I hope you guys enjoyed the video. Thank you guys for watching. Jerry Trades with SoCal Trading Group. 11-19 trading recap, 160%. We got a win here at SoCal Trading Group. All my boys were able to profit. If you're interested in joining here at SoCal Trading Group and catching more trades like this, always feel free to message me here on TikTok at Jerry's Trading or on Instagram at SoCal Trading Group 1. Hope you guys have an amazing night. Jerry Trades with SoCal Trading Group. Over and out.